Friday, September 2nd, 2016. Maneko64 here, home of alternative economics and contrarian views. I like to talk about physical cash, M0 and M1 today, and credit. I think this subject is really important. I think it could be more important, more serious than actually the national debt, the government debt, be it in the UK or in the US. And the reason I'm talking about this is that I saw a YouTube video yesterday that popped up on my YouTube, and it was this presentation by Bill Bonner from Agora Finance, Agora Incorporated. They're the biggest providers of financial research in the world. They've got more subscribers than people read the New York Times, but it's a private company, not quite low key. And I have to admit, Bill Bonner was talking about this last year as well, and he's talking about it today. I'll put the video above in the cards. And basically, he's talking about how prior to the 1970s, when consumer credit was not as big as it is now, when consumer credit didn't, make a huge part of the economy, people used to actually work, earn the money, the cash, and buy things. There was credit, of course, but not as much. And he goes on to talk about how we've had a huge credit boom, and he's right. Since the 70s in the US and also in the UK, where I'm based, credit is huge. You can tell the difference nowadays when you look at an advert for a car. It doesn't tell you how much the car costs. It just says how much you're going to be paying a month in credit in your loan payments every month. It doesn't, I remember 25 years ago, they gave the price of the car at £20,000. And a lot of times, if you didn't have the money, you couldn't buy it. But nowadays, everything, big ticket items, it says, oh, get this for £20 a month, get this for £100 a month. It's all based on credit. And what that has done is that it's created a massive boom while the middle class in the United States, Western Europe, has been basically diminished. Earnings have dropped in the last 25 years comparable to credit. People are, there is no wage growth. Then the reason why, the UK and the US have been able to keep, the consumer has been able to keep the strength that it has is through credit. And there is, credit is backed by, it's a liability of the consumer, but it's backed by, an asset of the financial system. And what he talks about is the difference between credit and physical cash, which is actually, cash in circulation, like paper dollars or paper pounds or coins. And according to him, there's about just over $1 trillion of physical dollars in the world. And he actually thinks that only about 250 billion are actually circulating in the US. Says there's a lot of it is dead money because it's being hoarded and kept under mattresses or whatever. So yeah, that's M0 or physical cash, which is basically the cash existent in the economy. For the UK, that amount, and I've looked at Bank of England data and tradingeconomics.com, M0 in the UK, the last number was 78,369. So that's the amount of physical money in the UK. And then you look at M1. What's M1? Well, that's the physical money that exists plus all the deposits, in deposits and current, checking accounts and deposits in the bank, and also maybe, savings accounts. So M1 is you add up all the physical cash and deposits in banks, savings, checking accounts, and that becomes M1. And in the UK, M1, the latest number is 1,576,279,000 pounds. That's M1. So that's 20 times the amount of physical cash in the economy. So what that means is that for, if you think you've got 20,000 pounds in the bank, there's actually probably just 1,000 pounds of physical cash backing that 20,000 pounds in your bank account. So that just goes to show you how can I say, precarious and leveraged the financial system is. And the reason why this is happening is because the middle class, the average worker, they've lost, their purchasing power, the incomes, the jobs they used to have. It doesn't, they can't really, with the cash that they earn, physical cash that they earn, they can't afford to live or buy things that they need to keep their standard of living. So how is that being papered over? Through credit. And in 2008, Bill Boner goes to talk about this in his video. That system imploded, and it was hours away from totally collapsing because people were taking the cash out of the system because they lost faith in it in the collapse of '08. But, the central banks in the US, in the UK, and everywhere else, and the governments, they saved the system by creating even more credit backed by the taxpayer. And that's been ongoing until 2016, till the present day. And the reason why, they've kept goosed up bond markets and stock markets is because they want investors and the populace in general to keep their money in financial assets, to keep the credit system rolling along. And that's why, they've been desperate to keep asset prices high because, the first sign that we're seeing, the beginning of the next bear market, be it in bonds or stock, people are going to liquidate these financial assets and try to, maybe get cash out of the system. They might lose confidence. So that's what they're scared about, is the fact that there's so little actual physical dollars or pounds out there to support the system. And that's why there's all the talk of banning cash as well. And the other problem they have is that, things are not getting better. So they're desperate, the central bankers. They're, cutting rates. They've got negative interest rates. So people are saying, if the system is in such trouble and there are negative interest rates, why am I going to keep physical cash in the bank if they're charging me? I'm going to take that out. There's a story about a Swiss bank earlier, I think this year or last year, with Switzerland having negative interest rates. They wanted to take something like 90 million francs in physical cash and store it in their own private vaults because it would cost them less to do that than keep it in a financial institution. But the bank and their bank and the Swiss National Bank banned them from doing that. So that's the problem. And one of the reasons I'm talking about this in the UK, because that's where I'm based, and I've got quite a few viewers in the UK as well, is that I've heard in the last couple of weeks 3 or 4 times these adverts on the radio from the Financial Services Compensation Scheme, or FSCS. It's the UK equivalent of the FDIC in the US. Basically, they cover your bank account up to £75,000. And if you have a joint account with your wife, or if you're a woman and you have a joint account with your husband, they will cover it for £150,000. I have to tell you though that up until last year it was up to 85,000. So that's dropped. So yeah, they've come out with these adverts, and I'll put a link to it to these adverts. This advert on the cards. And basically, this guy sounds very nice, and if you're looking to save money, to buy a new car or to send your children to university or do this and that for a nice holiday, don't worry, your money is safe. We guarantee your money, up to 75,000. If your financial institution, something happens to it, you will get paid within 7 days. And then they also say at the end, but this will probably never happen anyway. So like it didn't happen in 2007-08, right? But in this advert that I put, they don't say that. I couldn't find the advert where they actually say at the end, this will probably never happen. But I'd never heard that advert on the radio so many times, Actually, I didn't even know they had an advert until the last few weeks. Is the UK government and the Bank of England, are they worried about people trying to take physical cash out of the system, seeing that they're probably going to go to zero rates, maybe even negative interest rates? That could be the reason why. But yeah, that's one thing I wanted to talk about. That could be a big problem. We do not have enough physical cash to run the economy because there's so much debt in the system. And that's why keeping an eye on the credit system, and if it implodes, it could be very serious. It could basically disrupt or, halt the way of life we've had for the last 20 to 40 years based on credit. It could be very disruptive. So if you enjoyed this video, please like, share, and subscribe. If you would like to donate to my channel, there's a few links below for PayPal, Bitcoin, and Patreon. Thanks for watching. Bye.